brother, we're just going to basically just go through the basics again. You know, man, I just started listening to one of your audiobooks.
I'm only going to recommend two, which would be the one we're talking about today, Stock Market Investing for Beginners and Dummies.
Yes.
And then I think the personal finance one is good also.
Okay, the one for beginners and dummies, and what was the other one again?
I think the personal finance for beginners and dummies, that's also pretty
Okay.
good. And then when it comes to the books, Smart Investors Keep It Simple.
Yes.
That's like my favorite book when it comes to dividend investing.
Okay.
But with the YouTube channel, I would recommend those two. Yeah.
Okay.
But you can pretty much listen to all of them.
Right. Well, I started listening to the first one you mentioned, and I love it. And then the one that really got me excited was the one on dividend stocks.
What was that, the audio book or the actual book?
The actual book.
Yeah, okay. And I actually listened to the Stock Market Investing for Beginners and Dummies today again, because it's been a while since I wrote that book. So I also forget what I write about, because it was back in 2018. So I also listened on YouTube to the book for like an hour just to get back to like, what actually did I write?
Right.
And it's actually pretty good. I need to do a YouTube video on it instead of having it as an audiobook. I need to turn that into a YouTube video and explain with pictures and images what I'm actually talking about.
Right. And I think that would help a lot as far as reinforcing people's learning.
Yeah.
People hear, people see.
The thing about YouTube is extremely time intensive. I never knew how much how much time it would take, because you have to do the research, then you have to write out the script, then you have to record it, and then you have to edit it. And I'm like, but I need to get on it. I need to start producing like weekly YouTube videos, just talking about stock market investing.
Yeah.
Like 10-minute videos.
I think it'd be great, and I think it'd be worth your while. I think you'd also get a large subscriber. Well, you already got seems like you already got a lot of people viewing your things.
Yeah, I think so right now I'm close to 2,000 subscribers, and that's with me not even posting anything. So on a daily basis, I get about 10 subscribers, on average 10 to 15, and I know if I make more videos, it's gonna trickle up faster.
There's no doubt about it. I wouldn't doubt that within the least. And I know what you mean by the amount of time that it takes to developing the videos. I have a guy who does mine, and every so often I say to him, man, you know, why you charge me this amount? And he goes through explaining all that he has to go into doing it. Then I stop him. I said, okay, I got you.
For me, it's I think I'm writing one right now on stock market manipulation. It's the writing of the content that takes a lot of time, the researching, and I'm not used to creating videos, so I'm fairly new to video, so I make a lot of mistakes. So a 10-minute video might take me like 2 hours to shoot.
Wow. Okay.
Yeah. Because it's different. It's not like I'm talking about my opinion or my life experiences. I'm talking about stuff that I researched. So I have to memorize it, and I mess up, I forget, then I have to look at what I wrote, and I have to say it again. It's interesting.
Right. Yeah, I can see that. Man, what got you started?
With investing itself?
Yeah.
So when I moved to the US, I wasn't too sure about how the whole financial system worked in the US. So I came from Europe. And I started reading books about personal finance, checking accounts, savings accounts, but those books always had a chapter for investing in it. So I'm like, okay, this is pretty interesting. So I started reading the investing chapter, and then I'm like, okay, I need to like get into actual investing books. So I started reading books about investing, started just back in 2008, 2010, I started investing a little bit here and there just to test the market because I was fairly new. And that's pretty much how I started. And in 2014, that's when I revisited my investments. And that's when I knew the power of investments, because I started investing in companies, but I didn't touch my accounts. I didn't even log into my accounts. So I was doing the whole 401k thing. And then I would log in a couple of years later, and I would see that my money grew a little bit. Not a lot, because I didn't have a lot invested. But that was kind of the click. That's when the light bulb went up.
Hmm.
So I revisited investing back in 2014, and that's when I learned about dividend investing. And ever since I learned about dividend investing, I'm like, okay, this is something that I need to focus on more. Because if you have like an entrepreneurial mindset,
Mhm.
you will also look into starting your own business. And that's something that I always tried to do when I came to the US, start my own business. But I learned that investing is easier to get into, and it does not require that much of your time
Mhm.
compared to a business. If you work on a business, you have to put in all your time into it. It might work, it might not work. But with investing, you put your money in, you do the research, of course, you put your money into the stock market,
Mhm.
and you, especially with dividend investing, you can see passive income coming through. You're
Mhm.
just like, wow, this is awesome. And especially when I look at companies, like if I start my own company and it's a successful company, later down the road, let's say I have a wife and kids or I have family members, can I pass it down to them? Like, let's say I start a coffee shop, a coffee
Right.
business. Wouldn't my kids want to work in a coffee business? But then when I think about investing, investing is something that you will have to do in your life, because you will start working and you will have the option to invest, but you don't want to work your whole life. So investing will become a bigger part of your life the older you get. And I
Mhm.
was always like, investing is actually something that I can teach to somebody and something that I can pass on. A
Yeah.
business might be iffy, because your kids grow up, they might not want to own your business. They're like,
Mhm.
Dad, I want to do my own thing. But
Right.
investing is, I always looked at it as something different.
Yeah.
And
And but in a sense, when you're an investor, aren't you also an entrepreneur? Aren't you also a business
yes,
owner?
yeah, I don't, yeah, I see the uh, the person that starts a business more as an entrepreneur than an investor. It's maybe
Okay.
because I've been doing it for a while now, and it
Mhm.
it it feels like a normal thing. But one thing that I have learned is that when you look at an investor sits to me on top of businesses, because an investor has the skills to analyze businesses. So
Mhm.
businesses come and go, but as an investor, your skills, you can always use those skills. If you
Mhm.
look at Warren Buffett, you look at Charlie Munger, they've been
Mhm.
doing the same thing for decades.
Yes. Yes. Yeah. Or
So,
Peter
so
Lynch or
and look
Catholic.
at what like look at what happened with COVID. So many businesses shut down, but as an investor, you still have the skills to analyze companies and figure out which ones are actually doing very well in this day and age with COVID.
Mhm.
And all you have to do as an investor, you sit on top of businesses and you analyze businesses and you buy and sell the ones that you want or don't want based on their performance.
Right. Right. So through good times, bad times, you're still quote unquote working, or you're still
Yeah,
as an
and,
investor,
and
you're still working, you're still making money.
I don't even call it working, because Corbin, as you know, if you're a dividend investor, like how many times do you invest in a month? Like you might
Right.
like send over like $1,000 to your brokerage account.
Hmm.
You might invest it in two different companies, 500 each. And the rest of the month, all you do is log into your account and you check your statistics, you check your metrics,
Right.
and it's like it's it. I was talking to a friend of mine. He actually bought the Smart Investors Keep It Simple book
Hmm.
in back in 2017 or 2018. I never knew about him. He lived in Florida back then. He bought my book. He found me on Instagram
Hmm.
and Facebook, and I spoke to him maybe 2 weeks ago. He lives in Las Vegas right now. He works in the hospital in the hospital department, so he can travel.
Hmm.
He told me that moving from Florida to Las Vegas and still being able to just do dividend investing, it's a heaven sent.
Hmm.
He doesn't have to worry about. He used to do real estate investing, And he said in Florida, since he's black also, he would have to deal with racism and stereotypes because people would look at him like, okay, you're the type of guy that wants to buy homes and as an investment property. But he told me that as a dividend investor, he can sit in his home in his shorts and build wealth.
Mm.
He can go to work a 12-hour shift, come home, be tired, but dividend investing is so easy. He just logs into his computer, he has his watch list, and he buys his stocks.
Right.
Compared to like having a business or like working and having a part-time job or working and having a business, it's too much to handle. It's too much stress. But
Right.
with
Right.
investing, you can actually do that, and it won't take away that much time from you. Once you know the fundamentals and you've learned what works for you, because everybody has a different investing style.
Right.
But once you hone down on a specific investment style that works for you, it becomes a lot easier, and
Right.
it doesn't even feel like work.
And even the great ones that you just mentioned, they all have different
Yeah,
investing styles, don't you think? Don't you
yeah,
say? I
and,
mean,
and because like if you think about it, a lot of people like to buy low, sell high because that's what everybody's used to, or short selling, um, options trading, forex trading, day trading. Everybody has their own style, and it's good to experiment with each of them and see what you gravitate towards. I've always gravitated towards the dividend investing. I do a little bit of day trading. Like when I'm about to buy a stock, that's when I use some day trading methods to buy them at the right time. But I'm a value investor. I stick with dividend investing. I don't do day trading anymore. I've never like options trading and forex. I don't dabble in those. I just stick to what I know and what comes easy for me. But it's always good as an investor to just experiment and see what works for you and what you gravitate towards.
Mhm. Now, for some of my newer listeners, explain to them what a dividend stock is and what a dividend is.
So, and just going back, so if you start a company and it's a successful company, a lot of businesses want to generate more money in order to expand their business. Expanding meaning in the sense that you have a lemonade business in Kentucky, but you want to expand to Missouri. You want to expand to California. So you need to generate a lot of income. To do that, a lot of companies go on the stock exchange. They do an IPO, an initial public offering, to be able to generate all that income so they can expand.
Right.
A a dividend company in this case is a company that a dividend company is usually a company that is a stable company, so they've been on the market for a long time, and the goods or services that they sell are stable and much needed in a good or bad economy.
Mhm.
And the dividend is earnings that a company pays out to to the shareholder. So think about a company like Coca-Cola or
Mm.
Pepsi.
Right.
Pepsi sells products more than just Pepsi doesn't only sell the Pepsi product. They also sell, I think, Doritos. We looked at it last time. Doritos, Gatorade. Every
Mm.
time they sell a Gatorade, every time you go to the store and you buy Gatorade, a percentage of that profit gets paid out as a dividend to the shareholders.
Mm.
So these companies are multinational companies. They're all Coca-Cola is not only in the US, it's all over.
Right.
So these companies generate billions of dollars in net earnings, in net income. A portion of that net income is paid out as a dividend to the shareholders.
Mhm.
So if a company like Pepsi is worth 1 billion shares, it's more than a billion shares. If you own one share, you get a piece of that dividend, a piece of that earnings as a
Mhm.
dividend.
Right. And I know they're like real estate investment trust. They always paying out dividends. And
So
go
there
ahead.
is one. So I don't fall in love with companies because if a company stops paying a dividend, I sell them. Like I had
Hmm.
to sell, and I don't like selling them, but I had to sell Ross Stores and Disney because Disney actually stopped paying their dividend. Disney
Get
I
out of
had
here.
the Disney stock in my Robinhood account, and they stopped
Wow.
paying a dividend because of COVID. They had to close down their parks, so that
Right.
affected them badly. I don't like to fall in love with companies, but there is one real estate investment trust company called Realty Income. They
Yeah.
pay a monthly dividend.
Mm.
And if there's a favorite company that I have, it is that particular company.
Mm. Yeah.
Just
Yeah.
for
I
just
heard.
for
Yeah.
paying a month, just for paying a monthly dividend, it makes your income, your dividend income, it stabilizes it, and you see
Right.
it coming in monthly. That's nice because most companies pay their dividends quarterly,
Right.
and some even pay them like twice a year.
And it does it cost you that much to buy these? Real
It
estate investment trust, Coca-Cola, whatever.
so nowadays things are changing so fast. Sometimes it's hard to keep up. But in the past, you could just worry about buying one share of a company. So for example, Coca-Cola, I haven't checked. Coca-Cola pays a dividend, and I think the share one share costs about $45.
Mm.
So just a couple of years ago, you could just buy one share, and
Mm.
then you are already in the game of investing. Nowadays, with these new high-tech trading companies like Robinhood, they allow you to buy a fraction of a share.
Mm.
So let's say if I only have $5, I can invest $5 to buy a fraction of Coca-Cola. And
Mm.
here's the cool thing. You also get a fraction of the dividend.
Mm. Well,
Pretty much,
like you say, you're immediately in the game.
yeah.
You're
And
immediately in there.
and when I started investing back in 2008, 2010, you also had to pay a commission whenever you buy or sell.
Mm.
My when I Scottrade doesn't exist anymore. They got bought out, I think, by Ally or TD Ameritrade or one of the bigger companies.
Mm.
I had to pay 6.95 every time I bought or sold shares.
Mm.
And with Ally, I had to pay 4.99. Nowadays, these trading companies like Ally, Robinhood, you can buy and sell shares without a commission.
Mm.
So not only, and even back in the 80s, I did some research today for my stock market manipulation video. Back in the 80s, you had to pay $45 just to trade, to buy or sell as a commission.
Wow.
Because, of course, like when back in the day, you had to go, back in the day, everything was slow. You actually had to call your broker, put in the order. Your broker would call the stock to the stock exchange,
Hmm.
and those people had to get paid. But nowadays, everything is electronic, so you're able to save all that money. So
Wow.
nowadays, commissions are like you don't even have to pay commissions, even though these companies are making money a different way now.
Hmm. So I quite literally say I'm 12 years old. I go out and mow a couple of lawns. I can
Yes,
take my 20 something bucks and
yes,
I can go to my parents and say, Mom, Dad, I want to buy some Pepsi. I want to buy some Kroger. And boom,
exactly.
you're in the game.
Yes, exactly.
It's amazing.
And
It's amazing.
that's the way it is now. Yes, and the cool thing, I I learned about how convenient it is now by talking to my brother. I'm the type of person like I like to analyze companies on my laptop and
Hmm.
then buy them on my computer also. My brother really loves Apple. I'm more on the Microsoft side, but
Hmm.
both of them pay a dividend. So this is probably maybe 2 years ago. I told my brother I was analyzing companies and I noticed that Apple was trading at a discount. And I know my brother loves Apple, so I'm like, I told my brother, okay, now's the time to buy Apple.
Hmm.
So here's the cool thing what happened. Like I'm a computer guy, but my brother is different. My brother was at work and he logged into his trading account on his phone. So he logged in on his phone,
Mhm.
put in how many shares of Apple he wanted to buy. Boom, done within 5 minutes, less than 5 minutes, and he went back to work. That's how
Wow.
convenient and easy it is now.
Wow.
And when he told me that, I sat back and I thought, wow, that's so cool because you can be anywhere in the world and you just
Uh-huh.
have your phone and you can check your investments, you can buy, you can sell, you can do everything now.
And then so once you've done that, then what you would suggest is, hey, check in on it every so often. Do some
Yeah.
research on the company, keep in touch, keep updated on what the company's doing. And
Yes.
if you think you need to buy more, you buy more. If you need to sell some or whatever it might be, but make an informed decision. Go
And
ahead.
when it comes to analyzing companies, because I know we say the word analyze, but it goes a lot deeper by looking at the actual metrics, like how good a company is doing. But think about it like this. Back when Charlie Munger and Warren Buffett started investing and they analyzed companies, they actually had to look at the 10Ks of these companies, which is like every year a company puts out how they did,
Hmm.
and they need to, according to the SEC, they have to put this out for their shareholders.
Hmm.
And Warren Buffett would have stacks of those reports, and he would go through them line by line, item, and do his calculations. Nowadays, with the internet, with Google, you can Google all that stuff.
Hmm.
Instead of taking your calculator and punching in numbers, you can go on Google and look at charts, which will tell you how a company was doing when it comes to their debt, how much money they made, and etc.
Hmm.
So it is a lot more convenient now.
It's amazing. It's just absolutely amazing. And I mean, the opportunities are fantastic. So let's say you're talking to a parent right now, and they have a couple of children, maybe
Yeah.
6 and 13. Would you suggest to them that, hey, get your son and daughter, your 6-year-old, your 13-year-old into the stock market?
Yes, but it you have to be careful because you do want to have a little bit of education before you
Okay.
jump in.
Okay.
Because a lot of people are fearful for when it comes to the stock market,
Yes.
and I don't blame them because even my dad had a bad experience. My dad lives in Europe. Back in 2005, 2006, he actually lost his investment. So I think he got a call from some type of investment company, and they told him like, okay, these are the companies that you can invest in. He invested in those companies. He ended up losing all his money, and
Wow.
he told my brother never to invest at all. I
Hmm.
was I was in the US and he never told me that story. I looked at my dad, I'm like, how come you told my brother but you never told me?
Right.
But at that same time, 2005, 2006, that's when I started doing some research on the stock market. So like we talked about how I started just learning about checking accounts and then saving accounts. But then
Hmm.
I also started teaching myself a little bit more about the stock market.
Okay.
And I did jump in, and the way I started investing in index funds
Hmm.
because people talk about mutual funds, bonds, index funds. I started with index funds and just putting some money into an index fund and just keeping an eye on it, see what it actually does. The funny thing was that index fund, I can't remember what it was. Vanguard, the
Hmm.
Vanguard S&P 500 index fund.
Hmm.
It also pays out dividends. So I saw the dividend back then, but I couldn't connect all the dots back then. But definitely to go back to your question, the younger you are, the younger you are, the easier it will be because you have so much time on your side.
I
My
got you.
brother has two kids, a boy and a girl. I bought one share of stock for each of them. I bought Coca-Cola and McDonald's just
Hmm.
to get them in the game.
Right.
The youngest one turned 5 just 2 weeks ago, and the oldest one is 7.
Hmm.
So even at that age, I'm trying to get them to see the benefit of starting to invest at
Right.
that young age.
Right. And I'm sure they can, I mean, they have that real connection with it. I mean, what little kid doesn't know McDonald's, you know?
Yeah.
And Coca-Cola, I mean, you know, the little kid
Exactly.
doesn't see Coca-Cola almost no matter where he goes.
And that's the thing. That's why I did McDonald's and Coca-Cola, because they love going to McDonald's and they love drinking Coca-Cola.
Right.
And even if you think about the U.S., a lot of kids and students, they love like Jordans, Air Jordans.
Mm-hmm.
So buy an Air Jordan, but also own a piece of the company.
Why not? Right.
Yeah,
I
yeah.
mean, why not? I, I,
And
I, I don't know
and,
if you,
and Nike pays a dividend too. They pay a
wow, I
dividend.
didn't know that. I
Yeah.
didn't know that. And yeah, I sometimes wonder though, I'd love to know if those big athletes like Michael Jordan own sizable chunks of Nike stock. I was always curious about that. I know they give them money for contracts and all, but I was wondering, man, I wonder if they own a sizable chunk of stock, because personally, that's what I'd prefer having.
The
You know?
I don't follow like what athletes invest in, but I do know. I mean, you hear the stories that they invest in things that like people brought up like investments to them. They
Mm-hmm.
invested in companies and they lost all their money.
Right.
A safer bet would be to invest in Nike. A safer
Yes.
bet would be to invest in like a Coca-Cola
Yes.
or a Pepsi, a McDonald's, um,
Yeah.
and the list goes on. Johnson and Johnson, Procter and Gamble, Colgate, Clorox. That would be a safer bet. But I do know that the like um, basketball players such as LeBron, they are a lot more aware of like financially what's going on
Mm-hmm.
compared to the previous generation.
Wow. It makes a difference. I mean, it's like you say, that knowledge, that information, that education makes a world of difference.
Yeah,
And
definitely. And nowadays it's freely available on the internet, which is a good and a bad thing because you also want to be careful with like information overload and scammers
mm-hmm.
because there's a lot of people on the internet that just put out information. So there's a lot of information, but you also want to find the good information.
Mm. And that's the one thing, you know, when I read about your book, one thing that really stood out with me about your writings and about you is that you're not out here being all super excited. Oh my God, buy this stock, you're going to make you filthy rich. You
Yeah,
emphasize, you say, hey folks, you got to do your homework.
yeah.
You got to do your reading. You got to do your research.
And I even tell people don't just read my book, read other books
Hmm.
also on this subject because like I just give you the blueprint, but take that blueprint, tweak it, and make it your own. So
Yes.
definitely don't just read like one book or listen to one video or watch one video on YouTube.
Hmm.
Make sure you expand your knowledge and then find what works best for you.
Right. Right. So you got your Warren Buffett. You got somebody like you. You got your Peter Lynch. I mean, check around, look at it.
Yeah,
Look at it.
exactly.
Yeah. I mean, it's really important, brother. We got a couple more minutes. I don't
Okay.
want to give my video guy too much because he's frustrated enough with me. Shoot, man, I'm practically paying for his college education. I don't know why he gets frustrated with me, but I love him to death. He's one of the best in the world, and
Yeah.
he invests in the market as well.
Okay.
Man,
Awesome.
he'll sit down and just talk with me. You know, to check this out, check this. You know, I'm looking
Yeah.
at this, I'm checking this out. I really like the way he's like you. He does
Gotcha.
his homework. He does
Yeah.
his homework, and he goes to a lot of different sources. And one of his dreams, he says he wants to. He doesn't talk about retirement.
Yeah.
He talks about it creating a situation where, from his dividends, he's making enough money. He wants to make enough money to where I don't want to go to this job. I'm not going to this job.
That's the goal. That's not the end goal. The end goal would be to generate wealth that you can pass down to your family members. But the
Mhm.
immediate goal is let me make so much money in dividend income that I
Mhm.
can just live off the dividend income and not have to worry about a job.
Mhm. or live off the dividend income and do a job that you're just
Yeah,
excited about.
exactly. Because you
Yeah,
never really want to retire. You do want to do something because you don't want to sit
right,
at home and just lay in the bed all day. That's also
right,
boring.
right.
And
Yeah,
I was gonna tell you something. I don't know if that YouTube video is still up. There's two YouTube videos, but one really stands out to me is there was a parking attendant that started investing. He never made more than $10 or $15 ever in
mm,
his life, and he started investing at a young age, and he generated half a million in his investment account, and I think
wow.
he also makes money through dividends. I need to
Mm,
see if I can find that video and I'll shoot it over to you. And
that'd
then
be
there was
great.
another video about a young guy. He like a teenager. He also started investing in. He came up with a thing like that's where I got it from. Like if you buy Nike shoes, like why not buy Nike shares also?
Right, right. I'm a big here in Louisville in this region. Kroger is big,
Yeah,
and my father, my father he first came to Louisville, and then he called for me and my sister to come live with him in Louisville. At the time, Louisville was somewhat segregated, and we were one of the first black families in our area. We'd go to this Kroger, and my father always would make this comment. He would go to this one white female cashier who treated him with such great respect. It was just so odd. It was just so outstanding that this
yeah,
white female would treat him with such respect. And he told me that story, and that story stayed with me.
mm,
And so I've been shopping at Kroger ever since.
yeah,
My sister's been shopping with Kroger ever since.
yeah.
And then one day it hit me, really after reading your book, well, hey, this is a solid company. This company's always been good to my family. Provides resources that people need on a daily basis: toilet paper, milk, gas.
Yeah.
I went in and bought several. I now have several shares of Kroger. Reinvest my dividend.
Yeah, because
And
I think Kroger
yeah,
has dividends, right? They pay
yeah,
dividends.
yes they
Okay.
do. It's about like 2.5, around 2.5%. Yes
Gotcha.
they do, brother. Yes they do.
Nice.
God bless Kroger. And and I regularly shop there, and I buy their shares, and I keep looking to buy more and
Yeah.
more and more. Keep building that up and let that dividend reinvest.
And you brought up a good point. The products and businesses that we grow up with. Now think about a Colgate.
Mm, yeah,
Think about like Tide.
right.
Like going back to Colgate, like my mom used Colgate back when
Yeah,
she was younger. I'm using it.
yes,
If I have kids, they're probably going to use Colgate also. That
right.
reminded me of the Kroger example that you just
Yeah,
gave. And of course, Colgate also pays a dividend.
right.
It's on my list.
It's
I don't
and
know
it's
if I bought them yet, but it's on my watch list.
right, and it's a solid product. I mean, it's just a solid product for the
You're
most
always
part.
going to need it. You're always going to have to brush your teeth.
Absolutely.
Even in COVID, even in a pandemic, you're still going to have
Yes.
to brush your teeth.
Gonna
Yeah.
have right, brother. As usual, it's been great. I'm
Yeah.
hoping maybe once we get this edited and we send it to you, hope maybe we can sort of look at maybe doing something on a regular basis, and also maybe having a situation where people can join us, not
Yeah.
necessarily talking, but can just join us and listen in, and then they
Nice.
can maybe through chat send me a question or two. Hey, can you ask him this question?
Yeah.
Can you
I'm,
answer
I'm
that?
going to have to step up my game then. Because the thing about investing is that the investing world is so large.
Yes,
There's so many
yes,
options. Like it's best to focus on a couple of things and try to become really good at those things.
right.
But even when we talked about the stock market investing for beginners and dummies, when
Uh-huh.
I listened to it, I'm like, wow, this is actually really good information. Who wrote this thing?
Right,
Because like I
right.
forget about this stuff because I just focus on the dividend stuff now. So when I
Right.
listen back to that book, I'm like, oh wow, this is actually like really good information.
Yeah. I mean, yeah, it's something, bro. And I really wish more and more within our community would get involved, in studying
Yeah,
it and passing on to our children and saying to our children, you know, I can understand why you want to be a great rapper and a basketball player and that kind of stuff, but look at this investing thing. Really
Yeah.
check this out and try to get more and more of our young people excited about it. Because it's like you know better than anybody, man, the more you get into it, it really gets quite exciting.
Yeah. I mean, the exciting part to me is that you're building up wealth. Like getting a dividend is exciting for like 1 minute. Like I usually get like an email from Ally, boom, you
Yes.
got a dividend. So I'm like, I'm happy. I log into my account. I check, okay, the dividend came in. It's a little bit more than the last time, but
Hmm.
after a minute, that happy feeling goes away and life goes on. Okay, what's next? I still need to wash my dishes. So that good feeling, it comes more from like you're building wealth.
Yes.
It's not necessarily from, okay, like a dividend hit your account and you're like looking at it and like after a minute you're like, okay, what's next? Life goes on.
Right.
But it's so easy. It's like it's on autopilot. That's also that's the thing that makes it fun.
Right. And maybe in our next interview, we talk about that in more depth, generational wealth, how to
Yeah,
build generational wealth, why we should build generational wealth.
because think about it like this. With a 401k, so if you work at a company, your company most likely is going to give you the option to invest in a 401k. 401k is good. I don't have any issues with it. I even invest in a 401k at my company. But
Mm.
here's the thing about a 401k. When you invest in a 401k, you don't necessarily know how much money you need in order to retire. So you might think, okay, I need 2 million, I need a million, like how much money do I need? And
Mm.
then of course the stock market goes up and down. So your investment is going to go up and down.
Right.
And once you hit that retirement age, you're going to have to start selling off pieces of your investment in order to live off your investment.
Mm.
So you're selling your wealth, all that wealth that you build up, you're selling it.
Mm.
With a dividend strategy, it's a little bit different because once you're investing and you're getting your dividends, you're already seeing your income. So I look at the dividend income as this is the income that I need to live off of. So I'm already seeing that like realized.
Mm.
And I can calculate my dividends into the future. Like how much do I actually need in order to retire? Let's say I want to make 10K a month in dividend income. I
Mm.
can calculate it back to how much I'm making now in dividend income, which is something that you cannot do with capital gains. Not
Mm.
as accurate, I want to say, as dividend income.
Right.
And then once you build up your investments with dividend income, you never have to sell it. You just you just hold on to it and you get your dividend income. So your investment grows and you're getting your dividend income
Mm.
compared to your 401k, which you will have to start, selling and then reorganizing, doing all types of different things in order to start living off that investment.
Mm.
Does that make sense?
Yes, it does. And I'm glad you shared that. I'm very
A lot
glad
of
you
people
shared
don't
that.
think about that, but
No.
that's something that I'm always thinking about, like the wealth aspect of things.
Right.
Like you don't want to build up your investments and then start selling those off. You want to
Right.
build off investments and pass those down to your family members, your kids, and you want
Mm.
to live off your investments.
Wow. You're right about that, brother. As always, it's been great and informative. And I will be in touch with you, okay? And
Will
brother,
do.
do me a
Thanks for having me on the stream, Corbin.
sure. And please send me your business mailing address. We'd like to send you a little gift.
Okay, it's in. I'll send it to you. It's
Okay.
the same. It's in the same email, but it's also in my YouTube account. But I'll send it to you.
Okay. All right, brother. Thank you.
Yeah.